You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody, that music means it is time once again for Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from the aforementioned network, as well as, of course, on the ever-exciting theoptionsinsider.com. We've got a great guest lined up for you. Next up on the old program, he's a newcomer to the program and indeed to the network. He is Jeremie Bacon, the CEO at Imagineer Technology Group. Jeremie, welcome to the Options Insider Radio program.
Hey there. Thanks for having me. It's great to be here.
And Jeremie, as we want to do with all of our first-timers here on the program and indeed on the network, why don't you go ahead and give our audience a little bit of an overview of your background in the space and how you found your way to becoming the CEO of Imagineer Technology Group?
Sure. So my, initial foray into Wall Street and the world of trading and trading applications and blah, 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 all happened back in the late 1990s. So dating myself just a little tiny bit there, but I was a grad student over in Japan studying economics and finance, and I was writing a thesis on why the Japanese Big Bang, which was this big economic reform package that was put into place in the mid-90s to try to help curtail the catastrophic market collapse of the late 80s, early 90s. And anyway, I was writing that thesis. On the back of that, I landed a job as a foreign exchange trader in the capital markets group of a regional bank over there. So that was my first experience, both trading and on a trading floor and moving money around. And that ultimately led me to do other capital markets work around structured products and things in Japan. And then I used that experience and bounced my way back here to the States, where I went to work for Goldman Sachs. Actually here in Chicago, working with the institutional equities unit there, focused mostly on international equities. But I had a great opportunity to work closely with our prime brokerage group and got dealing with hedge funds who were doing all kinds of fun stuff back in the early 2000s with structured products and converts and derivatives and options and all kinds of synthetics things before they became really big, and had a wonderful time doing that for a few years before leaving to go start building fintech software companies to help trading firms and traders.
And so you built a firm called Synapse Labs, which was acquired actually by Imagineer Technology Group just a few years ago. It's unusual to see a co-founder of a firm that is acquired then move on to becoming the CEO of the firm that acquired them. So walk us through that process. How did all that unfold?
Yeah, sure. So we did a merger between Synap and Imagineer at the end of 2017. But the story for that merger and our relationship with the business goes back actually to the early 2000s. So back in 2003, I had the awesome, wonderful opportunity to co-found a company here in Chicago as I was leaving Goldman Sachs, and it's a firm called Backstop Solutions Group, which is a few hundred people across the planet making platforms for trading firms and institutional investors and the like. I ran that business for its first 10 years before leaving to go do some other fun stuff around options and derivatives trading and stuff. But the long and the short of it is that Imagineer was one of our competitors at the time. And so I got to know the founder of Imagineer in, 2003, 2004, and we became frenemies. And so we stayed really close while we competed with each other day to day. And so fast forward to 2013, when I left the helm, if you will, of Backstop and stepped away from the CEO role to go do other things, I stayed in touch with Imagineer. And then I went and, like I said, I went and I worked for a firm. A lot of people that listen may know the firm, Orc. So I went to Orc as it was still Orc before it was rebranded as Itiviti.
Itiviti now,
exactly,
yes.
Right. So Orc, as people know, is an amazing platform for both options and derivatives trading as well as market access and connectivity. And the business has done really wonderful things over the past few years, entering into new markets and whatnot. But I had a chance to go and join the firm as president of the Americas in 2013 and spent a few years there helping to sort of reorg the business and think about new businesses and what we should acquire, what we should move around, how we should think about the long-term prospect for that company. And so all during that process, I kept really in close touch with Imagineer. And then in 2015, hooked up with a few of my former colleagues and early employees and teammates from the Backstop days. And we started a company called Synap that you mentioned. And that was early 2015. And we built that platform up. And ultimately, we'd stayed in touch with Imagineer. And we knew Imagineer's investors well. And we obviously knew the CEO and the team pretty well. And we shared the same views and the same culture and the same sort of desire and ambition to deliver super cool platforms into the asset management marketplace. And so it made sense for us to merge the companies together and to take a new step forward into 2018, 19, and beyond.
Some of those new steps over there at Imagineer. In fact, you have a bunch of different products. You just launched a new one very recently, Clienteer Web. So maybe walk us through what it is you guys do, what your offerings are at Imagineer. Then let's drill into this new one here, the Clienteer Web.
Yeah, absolutely. So we have at Imagineer, we have a couple of different products, as you mentioned, and Clienteer and therefore Clienteer Web are a couple of those. And what we focus on really as a business is almost exclusively, quite frankly, on marketing, investor relations, fund sort of asset raising, and then fund reporting, right? So our clients are CTAs, and they are two-person hedge funds, and they are traditional asset managers. They're private equity funds and venture capital funds, all the way up to gigantic multi-billion-dollar huge clearinghouses, right? That move fund products institutionally. And so we help them with everything from tools to help them manage their investor relations and customer engagement and sales and marketing activities through to platforms that help them to generate their monthly tear sheet, right, that they send out to their prospective and existing investors that help them to outline the risks and the opportunities associated with investing in their particular strategy relative to XYZ benchmark and things like that. And so the Clienteer platform sort of sits at the center of this ecosystem, and it's used by thousands of people across the marketplace to drive those engagements with their clientele and to track and see what they're doing with their information, the documentation they prepare, the reporting that they generate, the pitch books and tear sheets they send around. They use the platform to manage and monitor all that and to create it all. And then with Clienteer Web, the newest iteration of the Clienteer technology stack, if you will, it brings a whole bunch of new web-first, web-focused features to that platform that makes the system more accessible to smaller managers as well. So one of the things that every fund manager, whether you're a prop trader looking to raise a little bit of outside capital, or a Citadel that's got a gajillion dollars under management, the way that you go about raising money is the same, right? It's about communicating. It's about communicating your value proposition. It's about communicating your positions. It's about being transparent with how your strategy works, et cetera, et cetera. And the Clienteer Web platform makes that easier than ever for people of all shapes and sizes.
I'm glad to hear you mention the smaller end of the spectrum, the small two-guy prop shops and hedge funds out there, because obviously there's a large ecosystem of that here in and around Chicago. And, the whole fund marketing space has always been a bit of a pet peeve of mine. We see it quite often. The funds that are successful gaining AUM are usually not always the ones that are actually successful at implementing that. They don't have the skill set on board. Like, for example, there's a huge ecosystem of current and former traders in and around Chicago who are very good, shall we say, on the derivatives risk management side. And they probably should be managing money out there, quite frankly, yet they can't really grow beyond that friends and family stage because for whatever reason, they don't have the track record. Maybe people are scared about derivatives. That's probably a lot there as well. And then you see a lot of large funds out there that are growing, and a lot of their skill set is really on the marketing side, and they sub-manage out to other different funds out there. So watching the fund marketing side to me has always been a bit of an odd thing because I always thought the fund should focus, the marketing, I should say, should focus on the skill set that's being employed. That's what you're paying for. You're paying for someone to manage your money at the end of the day. And I see it so often. These people who are the best at doing what the core business of the fund are often the worst at getting that message out, right? They're the worst at marketing. They're the worst at going out and raising AUM because that's not what they do. They're glued to their screens 24/7, which ironically is what you want in a money manager. And you don't want the guy who's out there shaking the cup, right? You want the guy who's glued to the screens all day managing your money. And yet that skill set is almost the polar opposite of what you need for actually gaining AUM. So I'm glad to hear you're focusing on some of the smaller side as well. What do you think maybe we as a business, as an industry, you as a vendor could do to help some more of those guys get out there more and maybe clarify that process a bit to smooth the transition between the large amount of investors out there who want someone sophisticated to manage their money and the small funds out there who need to gain AUM, but they just can't. They don't want to pull themselves away from their screens, or they don't have that skill set. I'm sure you know what I'm talking about.
Oh, absolutely. I mean, just because you can manage money doesn't mean you know how to sell the fact that you can manage money, right? And we all had different skill sets as individuals. Someone might be a bonkers amazing options trader, but they might not be comfortable. They might not know how to effectively communicate the value they create with their options trading strategy to a prospective investor. And that's totally okay. It takes a village, right? It takes a team to build a successful business and a successful company. No one can do everything. And so, our attitude as a vendor is that, like, look, we come and say, let us help you, right? So we have an agency services group internally where we can build marketing collateral for people. We can manage their website. We can manage even a big portion of their investor relations activities, right? To just help them make sure they're communicating at a fixed cadence, so getting the message out to the people they know and the people they want to know as well. And that's a pretty unique proposition relative to most software companies, for sure. When you're thinking about it as a proprietary trader, you should be focused on your portfolio and your strategy all day long. Not everyone is in a position where they generate enough cash flow from their trading activities to be able to afford to go hire a guy or a gal or guys and gals to help them to market their fund and tell their story. But it's important that people find a way to do so, and that's part of the value that we bring to the market, and part of our future growth strategy is to become even more of a trusted advisor and partner to our clients, big and small, to help them to communicate that. We do this, not to cut you off there, but we do an investor relations and marketing survey every year where we go out and we talk to hundreds of people across the industry whose jobs, whose livelihoods are built around the fact that they know how to sell and service institutions and ultra high net worth investors in alternative strategies. And what's interesting is we've been doing this survey for years and years and years now. And over the course of the last several, as you've seen this tightening of fee structures and this compression of performance across strategies, right, and this sort of reversion to the mean across many alternative asset classes and alternative strategies, the thing we hear more often than not from everybody, whether literally it's a gal trading an options strategy in her basement to a gigantic global asset manager that trades all kinds of strategies, they all universally say the biggest problem they have in gathering and collecting assets is communicating their value prop. Telling people exactly why what they do is important and why it will bring them value into the portfolio. And that's a special skill set. And what you find is that the firms that have figured that out, that have figured out how to sell value and communicate a value prop, they're the ones that as you mentioned before, they tend to be the ones who slurp up the majority of the assets that are available to be slurped up. Doesn't mean they're the best at what they do, right? They're the best marketers, but they're not necessarily the best managers. And there's a big difference.
That's especially important for this industry, right? For the derivative space, because the product in and of itself has a learning curve and a little bit of a scary curve too. It scares people away. You already have a strike or two against you when you approach a potential investor. And now if you also can't market it, that's an additional challenge out there. Speaking of the products, I'm curious because you guys operate in a broad swath of the space. You know, your traditional long equity hedge funds, private equity, you know, I see venture as part of your thing as well. Do you find that the different funds at the end of the day, do they have different needs? They have different, you know, software development challenge for you guys? Do you have to design different things or different verticals? Or at the end of the day, behind the scenes when it comes to marketing and compliance as a venture fund and a hedge fund, really kind of the same beast?
From a compliance perspective, they're very similar, right? They're all registered investment advisors at the end of the day, and so they're beholden to the same set of laws and regulations as other groups are, right? But you do have differences in necessary feature sets and sort of, I guess I would call them almost workflows, right? So the way that a venture capital fund or a private equity fund goes about raising assets is very different from the way that a prop shop would raise assets. It's very different from the way that a multi-billion-dollar hedge fund would, and very different from the way that, you know, a traditional long-only money manager would. And so within our platform, we've devised and developed different models, if you will, and different modules that make it possible for people to sort of execute different workflows based on the type of fund that they're marketing, right? Whether it's a liquid fund or a highly illiquid hedge fund or highly illiquid other type of fund. What's interesting too, though, is like the frequency and the time horizon associated with raising money also varies greatly by asset class. And we support managers in real estate, private equity, and everything else, right? So, but a private equity or venture capital fund, I mean, they're raising money every 3 years, maybe every 2.5 if the markets are frothy and they find a way to deploy a bunch of capital, and sometimes maybe every 5 years. For them, you know, the money raising process, the asset gathering process is, I wouldn't say it's easy because it's never easy to raise money, but it's more predictable, and it is like being able to market a private equity fund is different from marketing a hedge fund. Like if I'm raising a private equity fund of, you know, strategy A, like I know the 50 institutional investors that can write checks, that have check writing capacity that meets my needs for the type of fund I want to raise, and I can call them all and I know them all, and it's an easier conversation than if I'm a multi-strat hedge fund who's trying to raise money for, you know, strategy A and strategy C, but is over capacity in strategy B. And, you know, how do you manage? They have to worry about how they manage both finding the right investors and ensuring that their product is positioned well relative to the competing products out there, and that they can communicate why raising money in strategies A and C at this point is better than raising money in strategy B, and blah, blah, blah. And if you're a single strategy manager, whether you're trading options or some other, you know, form of derivatives, or you are you know, a credit or equity fund, simple long, quote unquote, simple long short, you have the same, you're raising money all the time, right? Like literally every day you need to spend some time raising money, because for you to grow, and ultimately, quite frankly, for most strategies, for you to maximize the potential return of your strategy, you need to get to a certain AUM to be able to trade in volume and size such that you can take advantage of your trade, right? You can take advantage of your strategy. So it's really tough. And so the systems that we built are designed to help managers of all shapes and sizes and fund strategies to be able to maximize the way that they do those things.
Sounds like for your guys then, the traditional fund manager or the asset manager is beating on your system a lot more frequently, day to day sometimes, versus, you know, the private equity guy who's, like you mentioned, only raising money or only has compliance needs once a quarter, once a year. One certainly sounds a lot easier than the other.
Yeah, and
from your perspective.
Sure, and the PE and VC guys are then using the system for different things too. Like they're more interested in deal flow, right? So who's sending me deals and how many deals a quarter and how good are those deals and what's the quality and that kind of stuff. And a hedge fund manager or a traditional manager doesn't care so much about that, right? Or if they do, that's a front office function of the research and portfolio management team that's different from your marketing and sales team. So there's just differences in the way that the businesses actually operate, that some of which fit our platforms really well, and some of which are kind of outside of our wheelhouse, and we steer clear of them.
Sounds like you're in the right industry, at least from a growth perspective. I'm seeing a lot of data these days about just the explosion of need and explosion of growth in what they loosely lumped together as kind of that fund management software vertical. You guys must be seeing this in your own business as well. What is it you think that's really driving this explosion? Is it just around the tail end of a long bull market? A lot of funds out there and everyone has needs, or is it more that the funds that are out there are kind of waking up to the needs that they have and they're seeing the high compliance and the challenges of growing AUM in this environment? What is it that's really driving all this growth in your space right now?
I think it's a combination of factors. I mean, certainly the regulatory and compliance needs aren't going away, and they're only getting more and more stringent over time, as is the financial burden associated with dealing with those regulations and those requirements. So, if you're a money manager, in 2000, you didn't really need to have what we make today. It was a super nice to have, and the biggest of the big funds would have something, but most of the people are like, I can deal with it in a spreadsheet. I'll just email, it's fine. That's not the case anymore. I mean, platforms like ours have gone from being nice to haves to like literally you need this. If you don't have it, you are jeopardizing your business and your franchise because from a regulatory perspective, you have to know what you've sent. You have to know what you've said. You have to document everything about your interactions with your customers. It's required. You can't get around it. And relying on an email inbox or a spreadsheet, it's not reliable enough. It's not enough. So you have to have what we sell. Everyone needs to buy it or something like it. You should. Otherwise, it's a big risk for your business. So that's one of the reasons why there's nice growth in the marketplace. The other thing too is people are looking at. I think we're seeing more of this than ever before, and certainly we're kind of betting the ranch on this. But people are recognizing more than ever the need to become brand-driven organizations and brand-driven businesses in order to really scale. So think about like the top 15 hedge funds on the market on the planet today. If you go to Wikipedia, and you'll find the list of 15 right there. Of that 15, maybe 2 or 3 have like crap websites and don't talk about their story online. One of them would be like a firm that doesn't need to because they're closed to the outside world and will never open to anybody else. Another couple of them are probably working in earnest right now on their marketing strategy and their digital strategy. Every one of the other ones, you look and their websites are beautiful. They're full of content. They tell their story. They're marketing their business. They're not advertising their funds. They're marketing their brand and they're building a brand. And so if you're an ultra high net worth investor or or even just a high net worth investor who likes to invest in these strategies, like whose platform are you going to place more trust in, right? The one that looks and feels like it's an institutional quality business, or the one that feels like somebody went to their friend across the street and had their 15-year-old son throw up a site on Wix for $20, and come on. So you need it, right? Just to compete. Just like you need the best strategy to outperform your peers in the market, like you need the best marketing strategy to outperform your peers in raising assets. So what we're seeing is more and more people are realizing this, and they're adopting marketing and branding as part of their pitch, if you will. And that's different from the way it was 5 and 10 years ago. And, I'm not the only one that believes this or feels this way, but like that is what will those are the things that set the market leaders apart at this point. They know how to market and they invest in it. And that's, our strategy is how do we help people become better marketers going forward.
Speaking of better marketing, I can't think of a space that needs maybe a little bit more help outside of the options and derivative space than the crypto space. Quite a few people have sat in that chair of late from that side of the space, on the vendor side, on the asset management side, on the exchange side. We're seeing a lot of interesting developments, particularly in Chicago, in the crypto space. It's an exploding new market, new area for a lot of funds. I have to imagine, I won't put words in your mouth, but I have to imagine this is an exploding new asset class and category of funds for you guys as well. Are you seeing a lot of growth in that area? Are you guys aiming more towards crypto these days? So
we don't specifically target crypto as a group of customers.
Okay, this interview is over. I'm sorry.
But, and what I mean by that is like, so we're not proactively calling every crypto fund and saying, hey, you should buy our software. But just because, we're talking to all fund managers about buying our software. But I would say this, so last year, we had, I think, I'll be wrong here with the number, but probably 15 crypto funds, which last year, there were maybe 100 crypto funds that launched, and 15 to 20 are on our platform, and a bunch of other ones are not, but they didn't buy anything because they didn't have any money to invest yet in anything other than thinking about what they should do. So yeah, we had a big number of a lot of interest last year, and this year it's continued. In fact, right before I came here, I was over with a client who just launched a crypto fund of funds. So that's the first fund of funds structure I've seen so far in the market.
It's a sign of a big boy market now, a fund of funds for crypto.
Yeah, so these guys just came onto the platform, and they are, again, as far as I know, the first fund of hedge fund or fund of crypto assets funds on the market, and they've raised a pretty big chunk of dough, actually, interestingly enough. So there's definitely interest, and it's been kind of fun to see. What's also interesting is a lot of the funds that we've been working with that are crypto focused, they're not asset managers by. A lot of them aren't asset managers by background. A lot of these people are like tech dudes and dudettes who are like, hey, this is pretty cool. We should totally do this. In fact, one of the larger crypto funds we work with, it's literally 3 guys who are, Silicon Valley software entrepreneurs that we've known for a long time. And they're like, yeah, this is a great opportunity for us to build something cool, and we've always liked trading and fun, right? So what's interesting about that is that the world of crypto has opened up the door for non-traditional market participants to participate, and that might mean that they're easier to beat on the trading floor, if you will. But it's interesting because you're seeing this broader interest in trading from people that don't necessarily have a massive background in it.
No, you're right. That's been one of the more fascinating trends for us to watch here is that we obviously interact with a lot of the professional and institutional traders here in the city, but to see how many of them are now going into the crypto space, bringing that expertise with them, and then interacting with exactly what you're talking about, the traditional tech-oriented crypto guy or gal, the Silicon Valley startup. They came probably more from a technology background than they did from a trading background, and now they're deep believers, they're hodlers in all things crypto. And seeing those two mindsets come together, sometimes work together, sometimes clash, it's been one of the more fascinating developments, for me at least, as we've seen the crypto space evolve here in Chicago. Well, Jeremy, I can't let you out of here without asking you about this. I know you're also the chairman of the Illinois Technology Association. That's an area that's of interest to me. We like to see what's going on, keep tabs on the growing fintech and, reg tech areas here in Chicago. Anything interesting coming across your radar over there at ITA of late in those areas? Any new initiatives that are growing, new companies that are worthy of note, you think?
So, Illinois Technology Association has been an amazing group to be involved with for me for the past decade and a half or so. And it's a thrill and a pleasure to be able to serve as the chairman of the association. We have close to 500 member companies in ITA, which is fantastic when you consider that that represents a big portion of the growth stage technology companies in Chicagoland. We also have, and what's nice is that they range in size from call it Series A funded, maybe 25 employees up to the biggest of the big technology companies around, as you would imagine. And what that means is that we're in this really unique position as an industry here where, thanks to the ITA's programming, we get access as a group to all kinds of information and insight into what's happening across multiple categories of technology. So whether it's Internet of Things or it is, pure play like consumer SaaS or fintech and all of its categories from lending and insurance to fundraising platforms and things like that and everything in between. There's an immense amount of knowledge that's shared across that community and via the programming that ITA produces. One of the things that I just would say quickly to sort of more directly answer your question, ITA has thrown a program together this year, which is really spectacular. That's allowing tech companies in town, whether they're big or small, it doesn't really matter, to take their high performing sort of VP level teammates, right? So folks that are clearly capable, talented, have great experience, great exposure, great history, who are working their way up their career chain, who may someday be an SVP or even a C-suite type person at these companies, and putting them through training programs where they can get together the whole cohort, of people just like them, same level of career, same relative sort of functional operational roles, but build almost like an MBA program for marketing or for derivatives. Honestly, we were doing some stuff there, or for sales through to Java programming and everything in between. And what that's doing is it's opening up a lot of new opportunities for people to find out more about themselves and to develop their career without having to go look for another gig. And it's opening up doors for people to get exposure to other amazing professionals and to the rest of the ecosystem here in Chicago, which is further driving. Hopefully, it ultimately helps to further drive innovation and collaboration across all segments of the technology ecosystem here.
Well, we love new opportunities. That's certainly a good thing to hear. Well, Jeremy, we had a pretty far-reaching conversation here, but if there's something you said, oh, wait a minute, I forgot to mention that, or perhaps you want to leave our audience with a little bit of a hint, a little bit of a tease of what's coming down the pike from you guys and your team over there at Imagineer, now is the time, sir. The floor is yours.
Those are the worst questions because there are 1,000 things that one could say. As it relates to Imagineer, we have a really cool set of products and features for those products that are coming down the pike here pretty quickly. Specifically, we've got some really interesting tool sets associated with I kind of call it deep marketing, but ways through our platform that our clientele can keep better tabs on their client engagement. With everything from their website to the materials and documentation they share with them, at every point along that path, if you will, of communication and sharing, that are really unique to the market, and no one else does these types of things, which is really kind of cool. We also have there's a few other things that we're doing, but I can't talk about yet, so I won't.
It's just you and I in a room here. There's no one else listening, Jeremy.
Yeah,
it's
exactly.
Just you and I having a private conversation with microphones and everything. Well, Jeremy, I'm glad we can get you on to hear what's going on your side of the space. We have a lot of people sit in that chair, on the front end of the vendor side doing the analytics and the execution, but we haven't had many. I'm trying to think actually of any in your neck of the woods handling some of the marketing and investor relations thing, which is a growing area, and of course, as we've seen, a very important area especially for a lot of the smaller funds out there. So we'll look forward to seeing how these products unfold in the marketplace and how maybe we can get some of these smaller shops out there with great derivatives expertise out there into the space. So Jeremy, thanks for coming on, and we'll look forward to seeing how all this unfolds in the marketplace in the coming months.
Thanks for having me. I appreciate it. And we're always around and available to chat with anyone and everyone that wants to bat ideas around too. Happy to help the industry.
If they want to reach out, where should they go? What should they do?
You can just go to imagineercrm.com.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.